Thank you for staying with SABC News. In your markets news now, Asian stocks rose as strong corporate earnings lifted sentiment despite lingering worries about economic weakness. The yen also dipped after the Bank of Japan kept its rates ultra low even as it announced a broad review of monetary policy. Japan's Nikkei jumped 1% while the yen weakened 0.7% to 134.92 to the dollar. The tech-savvy Nasdaq led a Wall Street rally as strong quarterly report from Facebook parent Meta overshadowed concerns over slowing U.S. economic growth. Shares in Meta soared to touch the highest in more than a year after the company forecast quarterly revenue above estimates, and CEO Mark Zuckerberg says artificial intelligence is increasing traffic to Facebook and Instagram and boosting ad sales. The S&P 500 Communication Services Index rallied sharply along with Meta. It got a boost from Alphabet Inc., which reported upbeat results earlier this week. The S&P 500 gained 1.9%, while the Nasdaq Composite was 2.4 to the good. The Dow Jones Industrial Average rose by 1.5% to 33,827. All right, even as slower GDP growth reflected a drag from weak inventory investment, the Federal Reserve still is expected to raise interest rates by another 25 basis points next week. The rand opened weaker against a stronger dollar, down 0.3% than its previous close. The dollar was up 0.2% against the basket of currencies. The rand is trading at 18 rands 40 cents to the US dollar, 22 rands 92 cents to the pound sterling, and the euro at 20 rands 22 cents. The JSE is deep in the red in intraday trade. The all-share index has shed 0.9% to 77,379. The industrial index or 25 index has declined by 1%. Financials are 0.4% down. The top 10 resources index is 1.2% down, and the precious metals and mining industry index has lost 0.5%. And quick look at your commodities. Gold is currently trading at $1,983 per ounce. Platinum is at $1,068 per ounce, while Brent crude oil is at $78.03 per barrel. Our market analyst for today is Alex Weiss from Sales. He's a sales trader from Trive. And welcome so much, and thank you so much for your time, Alex. Obviously, a lot of focus today on U.S. data, particularly company news. We saw Facebook parent company, all of them actually boosting the S&P 500. How would you characterize everything that we saw that happened on the company news in the U.S.?
Yes, well, firstly, thank you so much for having me. I definitely think to start off, we saw a hot stream of red-hot earnings filter through from the U.S. tech sector. We saw the likes of Microsoft, Meta, Alphabet, and of course, the famous Amazon report above average results in both their top and bottom line results, exceeding analyst expectations. This resulted in the S&P 500 actually gaining just over 0.6% for April, significantly lower than the 3.5% gain in March. We also saw the likes of the Dow Jones Industrial Average Index tick up by just over 550 points for April. This is obviously very topical as we head into the last trading day for April. But yeah, a very, very red-hot earnings season for the tech giants, such as Microsoft and especially Meta. Both Microsoft and Meta saw their share prices gap significantly higher in post-trading activity on Tuesday and Wednesday, respectively, and that led to significant gains on both the S&P 500 and the Dow Jones Industrial Average.
Yeah, but the picture is quite different when you look at the growth prospects with those GDP numbers that came in below analysts' expectations. What does this tell us about the current health of the U.S. economy?
Yes, most definitely. We saw the U.S. economic growth came in below expectations. And what that tells us is that there is the potential for a mild recession come the end of the year in the US economy. Obviously, looking at your big, large cap tech giants such as Microsoft and Meta, despite delivering above average earnings results, US economic growth came in below expectations. And what that typically points towards is the potential for a mild recession come the end of the year. You've got the Federal Reserve Chairman, Jerome Powell, who actually came out in the last FOMC meeting to say that officials were looking at a potential rate pause in the last interest rate meeting. But however, market analysts and general market consensus indicates a potential 25 basis point rate hike in the upcoming FOMC meeting. And at the end of the day, we're staring down the barrel of excessively high interest rates, the highest levels since around 2008, 2009. And unfortunately, with the way interest rates have been hiked over the past few months, over the last year, in fact, avoiding a recession or a mild recession and avoiding a hard landing is fairly unlikely. So yeah.
Do you think with that projected or what's expected to happen with the U.S. interest rates, is the Reserve Bank of South Africa likely to follow that? Consumers are drowning right now, and we saw that inflation ticked up to 7.1%. Obviously, pointing to that, we may also see interest rate hikes ourselves.
Yes, obviously the South African Reserve Bank, historically speaking, has always followed suit according to what the Federal Reserve has done. However, a very different picture is painted in South Africa. We have our own headwinds facing the local economy with regards to load shedding, Transnet woes, obviously, and so on and so forth. So local headwinds do paint a slightly different picture for the South African economy in general. Specifically with load shedding, we've seen the likes of ShopRite, Woolworths, and your big food retailers disclosing excessive expenses pertaining to diesel in order to run generators. That has kept food inflation higher. So, in South Africa, even though inflation as a whole does not look as bad as global inflation, for example, we could see a surprise by the South African Reserve Bank, as we did in the last meeting. In the last meeting, the South African Reserve Bank hiked the repo rate by 50 basis points, and that went against what the Fed had done a week prior, where they had increased rates by 25 basis points. So it really is all dependent on how the local headwinds facing the South African economy evolve over the coming months.
While I still have you here, Alex, just yesterday we were celebrating Freedom Day, 29 years of freedom, and most of the people that we spoke to here at SABC, that my colleagues' stories that they did, a lot of the youth talking about how economic freedom is still so far way off. And with what you've just said now about all these headwinds, economic headwinds, of course they're going to put pressure on already a flat economy and joblessness that already exists, right?
Yes, most definitely. Look, unfortunately, with the local headwinds currently facing the South African economy, we haven't really realized the economic growth that our South African economy is capable of. Over the last 3 years, South African economic growth has significantly lagged behind population growth, and over the long term, that is not sustainable. So it is imperative that as a nation, we, come to terms with the local headwinds currently facing the South African economy. But having said that, South African companies are notoriously resourceful, robust, and we are able to really dynamically adapt to the local headwinds currently facing the economy. So it will be very interesting to see over the coming months how South African companies and the general economy adapts to face the local headwinds currently facing the economy.
Alex Weiss, he's a sales trader at Tribe. Thank you so much for your time. He was our market commentator for today. And with that, we'll go to a short break, and after that, it will be SME on Point.